All right, onto your markets now. Asian markets took a dive today. This as fears of a global trade war intensified in light of the US's imposition of tariffs of 25% on Canada and Mexican goods, as well as a 10% levy on Chinese goods effective from the 1st of February. While the Chinese market remained closed for the Lunar New Year, the Chinese yuan declined by 0.44% against the US dollar. The Nikkei share average declined by 0.27%, while the Hang Seng index ended flattish, down 0.04%. US markets continue to experience a volatile session on Friday as Trump officials confirmed that the administration would be levying tariffs of 25% on Canadian and Mexican goods, as well as 10% Chinese goods effective from the 1st of February. This news overshadowed data showing that US core personal consumer expenditure inflation gauge had come in line with expectations. The Dow Jones Industrial Average declined by 0.75%. The S&P 500 closed down 0.5%. The Nasdaq Composite Index lost 0.28%. Currently, we see locally the all-share index is down 1.2% at 84,881 index points. The rand is trading at 18.95 US dollar, 19.38 vis-a-vis the euro, and 23.30 against the British pound. On the commodities front, we see that gold is trading at $2,794 an ounce, platinum at $999 an ounce, while Brent crude is trading at $76.38 a barrel. All right, well, for more on the markets, to break this, I'm joined by Gary Boyson. He's portfolio manager at Rand Swiss. Thanks very much, Gary, for joining us, as always. So what's been the reaction of global markets to the Trump administration decision to effect tariffs on Mexico, Canada and China from the beginning of this month?
Well, absolutely. I think you can see it in the overall indices, and we're seeing it move across Europe today as well. So we've got the likes of Germany down 1.5%. The FTSE is also down over 1%. So this really is broad-based. And I think a lot of market participants have been wrong-footed. They've focused very much on the positive economic point of view of the Trump policy and almost discounted things that he had said around tariffs and said, oh, well, it'll be posturing. It's not going to happen. It's not going to be as dramatic. And now that we have firm numbers, I think everyone is suddenly trying to just reprice risk a little bit and say, wait a minute, we've had two very, very strong years. We've baked a lot of expectation into the cake, and maybe we've baked a little bit too much in. And I think you can see why markets are down. It's very scary when you talk about just how this could hamper international trade flows. It will result in a tougher time for not just the rest of the world, but for Americans as well. So it is definitely a scary thing from a financial market point of view, but by and large, I think the markets are taking it in its stride. So a 1% movement in markets or 1.5% movements in market for the day is not particularly dramatic in a historical context.
Yeah. So the local currency ground breaching 19 against the dollar at some point. Some attributed this to Trump's comments funds to South Africa due to claims of what he says are massive human rights violations, including land grabs taking place in the country. The big question, I suppose, is what might happen next? How is this translating onto our bond markets sentiment and so on? How you, Gary Boyson, are trading today?
So I think I've learned not to panic when it comes to the tweets on social media. And it's something that I think we flagged for viewers at the beginning of the year, that the Trump administration, we've seen the movie before. We know that this year is going to be full of very shock value, headline-driven announcements. We happen to have now a Truth Social tweet or whatever you do on Truth Social about South Africa, and it's difficult to unpack whether the currency weakness is coming specifically from the tweet or from the general risk-off mood that we're seeing following the implementations of tariffs. So to halt funding, the president has already responded to this and just reminded everyone that this is that South Africa is a constitution, that the government hasn't confiscated land, that this is a very valid mechanism within our constitution. So obviously doing what they can to alleviate alleviate some fears. And we have seen the currency move off its weakest levels, down from above 19. Also looking at US funding, I mean, we're talking about which largely comes through the President's emergency plan for AIDS relief. So even the funding that we're talking about it's a very specific type of funding that would have referenced. And I think far more important is the impact around AGOA when that potentially expired in September this year. But you also get the sense that this again is postured by the Trump administration, and that potentially, I mean, we're at least in charge of the G20 this year, but the US will be next year. And you kind of understand that there's far more at play here, and I think the markets are absorbing that and I think reacting in a sensible way. And what we see is a slight increase in the risk premium, around South Africa, but also just us responding to a risk-off day.
Yeah, Gary, very quickly, with the risk premium going up everywhere, given all the uncertainty, what does this mean for gold? Can we see it ascend to $3,000 an ounce? And I see that Harmony also put out their results for the half year, showing that they've done very well on the back of a solid gold price.
Yeah, spectacular results out of Harmony today. So, well, not results, but operational updates. So, really for the last 6 months, came in right at the top of their guide band in terms of production. So, producing, between 790,000 ounces and 805,000 ounces to the end of last year. Also better grades coming out of the company. But what really is astounding is their AISC. So, AISC is the all-in sustaining cost. How much does it produce? How much does it cost them to produce gold? And they're producing between 960,000 and 985,000 per kilogram. If you convert the gold price to rand at the moment, the rand gold price, essentially their product is getting 1.7 million kilograms. So you can see that massive operating leverage just flowing into the company. So it looks pretty exciting for gold miners at the moment, just with that huge margin that they're making on the elevated gold price. Can gold go through to $3,000 an ounce? We always do a little session at the beginning of the year with clients, and yes, for our forecast and our crystal ball, we would say yes. I think there's a lot of momentum behind gold at the moment. As the increasing tensions increase around the world, investors do tend to flood towards gold. Gold also does actually act as an inflation hedge. And with the tariff policies being put in place, that is going to be fairly inflationary. That also is positive for gold. And of course, we've seen a huge amount of central bank buying over the last couple of quarters, and you don't really expect that to stop as geopolitical tension increases. So yeah. I think there's a strong bull case for gold, but how much of it is already in the price? All right, that's what we got to wonder.
Yeah, we'll see. Thank you so much, Gary, for your time always. That was Gary Boyson. He's a portfolio manager at Rand Swiss.